So I'm going to use the TradingView platform for teaching one of the best strategies I've ever created. This strategy can apply to all markets and time frames. For this lesson, I'll be using the Ethereum chart and the 15-minute time frame. Basically, what I'm showing is really simple but effective way to spot trading opportunities across any crypto, forex or stock chart. Okay, the very first indicator we're gonna add is called ALMA, a smoothed Gaussian average. You find that under the indicators section at the top of the TradingView platform. Alright, so when you first add this indicator, the chart can get a bit cluttered and have some options we don't need right now. So we gotta go into the settings and change a few things. Under the inputs, set the smoothing to 4, look back to 21, volatility period to 45, and a standard deviation to 5. Then under style, disable everything except buy signal, sell signal, and bar color. With these changes, when the chart shows a B below the candle, that means it's signaling a buy and you can take a long position. And if it shows a sell above the candle, so you can short the market. But remember, you can't always get a high win rate from just one indicator, because signals against the trend can lower your gains. So we also need to confirm the signals with other tools and indicators. So one of the indicators we'll use to confirm the signals is called trend indicator and histogram. We'll optimize the settings to best complement our strategy and then use it alongside our first indicator to confirm trade signals. These two indicators approach should help us filter out bad signals and improve our overall win rate. So in the settings, first make the necessary style changes like in the video. Then under inputs, change BB length to 27, BB multifactor to 5, KC length to 27, and KC multifactor to 9. This indicator helps smooth our price action and makes it easier to spot trends and reversals. When the histogram bars turn green, that indicates an upward trend and we can look for buy signals. And when the bars turn red, that shows a downtrend where you want to watch for sell signals. As you can see, in this example, the first indicator gave a buy signal. But if you look at the trend indicator histogram, it's red, so it indicates a downward trend. So the buy signal is filtered out. The next buy signal has the same situation. The histogram shows a downtrend, so the signal is counter to the trend and it's also removed. And in this example, since the histogram is green, all those sell signals are filtered and you avoid taking losses. The two indicators working together give us a more accurate reading of market and improve our ability to spot high probability trades. Alright, so we're going to add one more indicator to finish the strategy. To add that, we're going to attach the whole moving average indicator to the chart. Just like the last two indicators, this one needs to be tweaked as well. So go into the settings and input section, change the length to 90. And then in the Style tab, adjust the color and thickness of the indicator line. This indicator will help us determine the longer term trend. Once we make those changes, now if the price is above the whole moving average line, we consider the trend bullish and vice versa. If the price is below the whole moving average line, we see the trend is bearish. Alright, now that we have all the necessary tools, let's review the trading rules and risk management for the strategy. First, let's go over the buy rules. For entering a buy trade, a few initial conditions must be presented on the chart. We must have a buy signal on the chart. Next, the buy signal must be confirmed by the HMA indicator, meaning the trend is identified as upward by that indicator. Histogram indicator in the trend indicator must be green and above zero line. Okay, so now the buy signal with all these conditions met is confirmed and you can enter a long position at the close of the signal candle. After opening the position, to manage the risk, you should place your stop loss below the most recent swing low. Also, to know when to exit the trade, use a risk-reward ratio of 1 to 1.5 to exit the trade. And now let's cover the sell side rules. For entering a short trade, a few initial signals need to be lined up on the chart. First, we need to see a sell signal on the chart. Then the sell signal needs backing from the HMA indicator, showing the trend as downward according to that indicator. Next, the histogram in the trend indicator needs to be red and below zero. Okay, so with all those things in place, the sell signal is a go and you can enter a short position at the close of that signal candlestick. After taking a short side, to manage your risk, place the stop loss above the most recent swing high. Also, to know when to cover the trade, use a risk-reward ratio of 1 to 1.5 to exit the short sell. But if you are still struggling to become a profitable trader, I've got one of the best strategies I've created laid out in an instructional video that I highly recommend checking out.